Rajiv, thank you very much for joining us today and being part of our Leaders of the Unexpected campaign.
My pleasure, Ryan.
It's great to talk with you. I'm really interested. You've had a remarkable 20-year career, and I'm interested in how your deep and varied expertise helps to give you the edge in your decision making.
Well, this 20 years have been remarkable. Being a finance background as my education, I have been through assignments like the accounting. I handle the accounting, the taxation assignments, handle the disbursement activity. But majorly, I have been in the international trade group. Within international trade group, I have handled various various activities, be it with handling the physical crude procurement, the back office activity, or even handling the front office activity on the physical product portfolio or on the front office activity for the paper portfolio. So this combination of experience on the physical as well as on the paper definitely gives me an edge. Further, while working in the back office, I understood the more on the international pricing, both on the crude and the petroleum products side, as well as the contractual terms, then the ISDAs, the regulations like MA, Dodd-Frank. So those all put together gives a good bag of experience, and handling those activities on the front office helped me to understand more about the market dynamics, the trade flows, how the market moves. So I'm currently, when I'm heading the commodity derivative desk, this entire experience on the paper as well as on the physical front helps me better. It gives me better understanding of the market dynamics, and overall it helps us in improving the decision making.
Yeah, Rajiv, I'm really interested in the scale and the complexity of your operations and the things that you have to manage day to day. And what's the role of data and technology in helping you with your day-to-day decision making?
On complexity, we are a third largest retailer of petroleum products in India. So we are having almost 1/4 of the market share of India. And on the refining front, we make around 18 million metric ton domestic production and another 10 million metric ton from the joint venture refinery. So overall my market share is more than what I can produce. So I'm net short on the product. So this net short on the product, definitely it's a huge complexity because of the volatility. As far as data is concerned, it plays very, very important role. So because of such a complexity, wide movement on the crude price or on the product prices, the volatility is so huge that to assess this impact, you need to have an updated data. So that's where data comes into picture, and it helps us to improve the decision making.
Rajiv, the last few months and this year in particular have been hugely disruptive. I'm interested in just how you've managed that disruption, and also maybe you can compare it to another period, 2008, which is another time of massive market upheaval, and how the two compare and how you've managed to navigate.
To start with, if we talk about the 2008 financial meltdown disruption, it was a huge as far as the crude prices is concerned, because I remember 2008 July 3rd, dated Brent settled at $144.2 per barrel, and then the prices started crashing. So if you look at the slide in the crude price, it was more than $110 per barrel. But when you look at on the product oil product demand side, the slide was not that much. Between 2008 and 2009, oil product consumption went down by only 1% annually, and again in 2010 it rebounded thanks to China growth story. Now, when we talk about this recent disruptions, it's massive. Of course, not on the crude price, because crude price were touching almost 70 in the beginning of January, and by mid-April we saw crude price sliding to, dated Brent from 69.96 on somewhere in the month of January came down to settled at 13.65. So if you look at this slide, it was not as deep as it was in 2008. But now when you come look at the demand side, huge impact. Last year 2019 oil product demand was 101 million barrels per day approximately. In April, we saw oil demand close to 78 million barrels per day, which means almost 22% drop on the demand. Of course, it has started recovering, and by mid September, we achieved almost 92 million barrels per day demand, which is still short of around 9.5%. So, on demand front, it's a huge impact. In fact, I mean, I would put it this way: this 2020 itself has started the disruption, because year started with it was supposed to be the golden era for refining with implementation of IMO. Because I mean, there were stories about refinery golden period for refinery with huge margin on the middle distillate. I mean, you will see unprecedented middle distillate cracks, and those kind of stories were flowing. And it was expected that with onset of IMO, for a shorter period, at least refining will see a golden era, or maybe a healthy refining margin. But came IMO, and then you had a COVID, which I mean started in China, and with China demand getting impacted in Jan Feb, and then in March it was declared pandemic, and then you had a lockdown. Everything, the demand collapsed, the price collapsed. So comparing 2008 with the recent one is difficult, because the severity is unprecedented. So I mean, it's very, very different than what we had in 2008.
Very interesting how you managed to navigate both of those difficult times. It'd be good to hear how you think the oil market will fare in this era of uncertainty, particularly on the international level.
Uncertainty, I mean, it has increased in last few months. In fact, the concept of peak oil or peak oil demand has started flowing. I mean, people are projecting, like other day somebody projected that the peak oil by 2028. But then there is even uncertainty in that, because there are people who are saying peak oil by 2035, or even OPEC is talking about peak oil on 2040. So it's still uncertain. In fact, when you look at June, we started getting demand back after the first wave, which was over, and we will see projection again coming back with mid 21 to be projected as where we may achieve pre-COVID level demand. Again, we had a second wave by September. The projection itself came down. I mean, you had a downward revision on the projection, and now people are talking about 22 maybe, or 23 we will achieve the pre-COVID level on the demand front. Of course, now for recent few weeks we have positive development of vaccine, and every day on because of some or other positive development of vaccine, market is moving. So it is very difficult to predict when this uncertainty will be over, and I mean, difficult to time when we are going to see normal days.
Yeah, of course. And the Indian market in particular, how do you see that faring in this era of uncertainty? What do you see the impact of renewables? That would be interesting.
India, I think, slightly different. India, I mean, we can draw some comparison between the 2008 crisis. After that, you had a China growth story. Similarly, when you talk about India barring 2020, if you look at the demand from 2011 to 2019, that decade India oil product demand grew by more than 4.5% on an average. Even from 21 to 30 decade, of course, again, all market analysts are expecting India to grow. As a country, on oil consumption, we are very low on the oil consumption, energy consumption, I would say, not on oil, but on energy consumption, we are among top, bottom 10 kind of thing. I mean, so there is a huge potential. Plus, India has a advantage of a young population. I think maiden age of a population around 28.4. So I think India definitely has a different demand story. So on India prospect, I would say we have a good growth in coming future, both as well on the traditional fuel as well as the renewables or the clean fuel, more clean on the gas and all.
And then just getting to know you a little more, Rajiv, I'm wondering just what excites you about the oil industry and the future ahead?
I think the uncertainty is what it excites me. I mean, if you look at I mean, this market has never been, stable kind of thing. In last 15 years, we had lot of, changes. Look at if you see between the era of 2005 to 2008, where you had a strong refining margin because of the good demand from China and Japan. So then after that, because of the good refining margin, you had a good refining addition between the period 2010 to 2014. Okay, and with continuous growth from China, you had a reasonable good refinery margin till few years back. Of course, when we came to 2020, the expectation that IMO again will pose a challenge. Because of that, you had a huge conversion of bottom upgradation before IMO. I mean, there was a run for bottom upgradation with the expectation that you will get more margin in the middle distillate. Of course, with COVID coming, that IMO became like Y2K. But I would put it that this kind of volatility or this uncertainty in the market is always there, and that as a trader, it definitely gives you an opportunity. So this is what it excites me. Of course, going forward, we will have chemicals, the petchem future. Again, the renewables coming after a few years in India, especially. So there are good challenges and opportunity both for trader. So this is what it excites me.
Great. It's good to hear about that opportunity ahead. Finally, Rajiv, I just wondered what skills, what technologies do you think will help the young trader of the future going forwards? What advice would you give to the young trader who's coming into this industry now?
I think this is the age of information, more faster information. I mean, since we have been discussing about 2008 and now, just to mention that when in 2008, when there was a disruption and all, we didn't have much technology or as far as the the information sharing is concerned. Like there was not much use on the smart phone technology, and use of social media was not there, or was very minimum. Today it's an age of information where most of the information is available on your smartphone, with so many apps are there, which gives you live or the updated information of the market. Then you have a good platform like Refinitiv, which keep on updating with the market information. You also have information coming from various sources on the social media on the market front. I mean, a good use of social media is there. So with all this, I think the AI plays a big role going forward in the decision making. So the traders not only needs to have a good analytical skill to analyze the data, but they need to possess those skills to capture this information faster, and use of AI to get more accurate and faster decision, because ultimately AI will help you to improve your decision making speed. So I think going forward, this will be the thing which any trading community needs to have. They needs to acquire the skill of a use of more and more technology.
Excellent. Thank you. Rajiv, it's been so good talking to you today. Fascinating insight. We really appreciate your time, and thank you again.
My pleasure. Thanks a lot.